get it right. Okay, perfect. Wait. Now we'll start off. So, guys, you know the drill. We'll first start off with the news drivers of the week. We start off by going through the week, going through the news drivers, going through the things that will happen in the markets, and just see where we'll see the influx of liquidity. So, let's just get right into it. So, Monday, as you all can see, we have Fed Chairman Powell speaking at 1. That's more or less like Sunday. So, I'll still trade Monday because this will have happened when, like, this will just be few hours past when I start trading at 9 o'clock, right? So I'll still trading. We have perfect amount of news. We have just an ISM service PMI, perfect, because then we'll just have some influx of liquidity of the day. So Monday looking just extremely good, okay, to trade. Tuesday. Okay, we have just some AUD news. Nothing special, it's just because of after the FOMC talk we had previous week. All the other European central bank, and here's also the Australian central bank. So I'll maybe just skip trading AUD USD. Of course, this will have some impact on the dollar, and also some impact on the euro. But overall, it's pretty fine. You should be fine. Just skip trading AUD USD. And yeah, just use market relations, right? No risk, no Rolls Royce. Man, you're crazy, dude. Anyways, Wednesday. No news drivers, but I think it will be a pretty good day trading. Just because we have already got the influx of liquidity in the market previous week. You can see we have FOMC, we had also non-farm payroll, and we also had GBP monetary policy, and we also got some other news drivers, really high impact news drivers, like the most dangerous news you can ever have. But what this means is that now the market is actually corrects itself, like it has more or less corrected itself, and the market will, I think, trade pretty nicely on Wednesday. We'll have some really good movements, maybe not some like ultimate movements. Thursday also extremely good, okay, extremely good. Friday we don't have anything special, and I would say Friday maybe gonna see like an thank God it's finally Friday setup, maybe, because we just have, like, if this becomes an big weekly extension, which I don't actually think it will be. I think it will be like a medium to small weekly extension, and a close off the body. So we maybe just Friday's maybe just gonna be the day which you should not actually trade, but we'll see. Like, going into this, like just going into with no bias and everything, this is a pretty good week to trade, right? A really good week. Like, I've not seen any, like, compared to what we have seen. I think this would be a pretty good week, these two next coming weeks. Anyways, let's just go right into the charts, starting off, of course, with the DXY weekly chart, of course, and you can just see my predictions coming into fruition right here, but we'll go through everything of this. So starting off, you can see that we are bearish on the weekly time frame. Bearish on the weekly chart, right? We have this, we have retraced down, going down, and now into a deep discount if you look at the bullish, right? And then we reacted off of an busy right here, made an SMR, smart money reversal, and created a market making model. Why did we create a market making model? Just because we had so much left unmitigated buy side liquidity, which the market maybe wants to do, and we have also been bearish for a while. You can see overall bearish, right, for a good amount of while. So I would just think that the market would retrace and rebalance, taking out this buy side liquidity before rebalancing and going lower, ultimately following the high time frames, because ultimately we are bearish on the weekly, right? You can also see this weekly fair value gap, which is really important, and also this weekly buy side liquidity equal highs right there. And you also have this inverse fair value gap right there, which you could have annotated if you'd like. Reacted off that continued higher And I think next week will also be a bullish week, taking out this, moving into the cost encroachment of this weekly or the 25% mark, depending on how bearish we are, because I think ultimately we'll continue lower. And when the daily and the weekly have matched up, it will just see some good ass price action. Anyways, I'll give you guys an pre-market sauce right here. Okay, so what I will be looking at going into the next week, I will be looking at buys. Okay, following this, having this as the draw liquidity. Listen, you guys. Then when we are in here, have taken out this, I will be looking for sells and going against the buys because I'm anticipating lower prices. Okay, I might get stopped out, or I might just catch a really good weekly extension to the downside as well. After it, like this is in 2 weeks. But this week bullish, next week bearish. Listen, you guys. So just gave you guys some really good pre-market sauce. Bullish, looking for bullish setups, going into taking this equal highs, and we'll talk much more about that on the daily time frame. And yeah, you could just see we're retracing up into a weekly premium. First value gap in the highest time frame. Looking to retrace into this, have these two as the draw liquidity. Maybe have this as the low time frame, this as the intermediate. But I'm having this as the low time frame, this as the intermediate, this is the high time frame. Anyways, you guys, going into the daily. This was the non-farm payroll we had on Friday. You can see we are in this market maker model. You can see with this original consolidation right here, moving lower, created another consolidation right here. Moved lower once again, and we left this buy side. What can you anticipate? When we have been bearish for a long time, we have left a lot of buy side here, a lot of buy side here. You could anticipate an market maker model, but you don't know it is a market maker model until you have seen this buy swing getting created. So you could have anticipated SMR right here, and then caught some good buys up here. And yeah, I will just continue taking this original consolidation, moving into this weekly fair value gap, and then moving lower. So you can see next week you have a really good draw on liquidity for those who are trading silver bullets or just trading lower time frame models, or because what I'm anticipating, and we'll look at that on the lower time frames, I'm anticipating a retrace and for the market to rebalance a lot of this buy or sell side inefficiencies. And then rebalance, and then just move higher, because we need a rebalance into equilibrium. So maybe a discount of this, so you can maybe more or less anticipate a range, and half of this stayed, right? And then you could anticipate it will move down lower to this like start of this previous day. And then you can anticipate higher prices. I'm sorry you guys for my English, but hopefully you understood me. Give me a thumbs up or something in the chat if you understood me. Perfect. Perfect, man. Anyway, so you have a really good draw liquidity going into this week, and I will highly suggest you all utilizing this opportunity, because you can just see how clean market maker model. And yeah, after this you might get some choppy price action, but I'm anticipating low prices. Okay, that's just pure predictions, no financial advice. Okay, but that's just what I'm predicting. And you can see here daily fair value gap. I was saying I would talk about this, but you can see we moved lower, opened here, moved lower, made a power 3 up here, reacted off the constant encroachment of this, and also weekly inverse fair value gap right here as well, constant encroachment. And yeah, like that's it. Going into the 4 hour time frame, you could see that we just these prior 2 weeks, this is why you have seen such a bad price action for the past 2 weeks. That's just personal preference, of course. Maybe you like trading in these consolidated zones. I personally don't, and I've not taken a setup for these past 2 weeks. Instead, I've anticipated this move up, breaking this consolidated zone, going for this buy side, and just finishing off the market maker model. Of course, you could have catched some good, like really easy non-farm payroll, right? But personally, I don't trade high impact news, but it would just have been such an easy buy. Some of my students took it actually, and I think y'all also maybe took it, some of you guys, because Like, it's not really hard to see this market making model forming. Anyways, consequent encroachment of this wick right here, you could also have utilized. Bam, look at this. Bam, move lower. Consequent encroachment of this fair value gap on the daily time frame. Consequent encroachment of this wick right there. Bam, bam. Easy, easy. Moving higher, I'm seeking this. I'm going to utilize this and the consequent encroachment of this as the drawn liquidity for next week. And then I'm seeking lower prices on the next week. And yeah, I think that's it. Like, I'm bullish going into next week just because of the market maker model. So you can also see, like, on the daily we are bullish. Daily bullish, you can see right here, market structure shift. 4 hour, you can also see we're bullish. But I think I'm anticipating a retrace and rebalance, taking out some sell side inefficiencies in here before moving ultimately higher. So, like, you could maybe, if you're really like intraday scalper, I'm not usually talking about this, but I'll give you some really much sauce. I'm anticipating, like, you can utilize maybe the 50% mark as the drawn liquidity if you're a scalper. So start off scalping down, or it's gonna retrace more likely, rebalance, and then moving higher, taking this. So, and then we're gonna do this most likely, depending on how bearish we are. We're gonna most likely react with the consequent encroachment or the 25% mark. I'm anticipating 25% mark, but we'll just have to see, right? It all depends on what the market does. Anyways, 1 hour, we can just have a quick look at it. I'm not usually looking at the 1 hour so much. You can just see the massive candle. You can see the consequent encroachment of this wick right there. You could have utilized, and you can also see we took sell side. Let's just see how easy it was. Like, just like, it's just so perfect, you know. Yeah, here's the equal highs I'm anticipating, and this original consolidation high to get taken. Anyways, you guys, now when we have gone through the DXY, you guys, remember now what we have looked at, right? Okay, and now translate it through EU. Okay, so perfect. Now we're going to EU, okay? Weekly chart right here, going through it. So on the weekly chart, we'll just talk about the things which have previously happened. I will be looking at this weekly wick, but you can see this fair value gap right here. We reacted off of it, continued lower as the DXY continued higher. EU has actually been really bullish, or not really that bullish, but as the DXY have been. But you can see we have taken out finally some sell side liquidity out here as well, which I've previously talked about, and I'm anticipating higher prices soon higher prices. But as the DXY will continue higher, it will push down the price of EU, taking this taking this original consolidation low. Now my English is starting to jack up. But yeah, so low prices before we're gonna see high prices, I think, because translated through looking at the DXY. You can see right here the DXY, we will move higher before we move lower, right? You see right here, moved higher, taking this buy side liquidity, moving lower because DXY risk off, moving higher. That means that the money transfers to the DXY because it's uncertainty in the world, blah blah blah. You guys know the drill. External ICT, moving lower, taking this because this will move higher, taking this, okay, taking this when it have taken this, okay, and the DXY have taken this. Then we can anticipate high prices and low prices on the DXY. But it all depends on what the DXY does, okay? If the DXY does not move lower, okay, and continues higher, we'll see lower prices on EU, okay? It all depends on what the DXY does. Anyways, you guys, let's just go right into the charts again. You can also see this wick right here. We'll talk about that because we'll match that up with a fair value gap. So you can just see, look here, look this wick, look this wick. You have two overlapping wicks, okay? But I think we will take this, moving into this, and we'll just see what happens. Anyways, daily chart, you guys, look here. So on the daily chart, you can see this wick right here. Okay, in this wick we have a fair value gap, over it we have a fair value gap. What you utilize is this, because this is imbalanced in both buy side and sell side delivery. A Wix is inefficient in both buy side delivery and sell side delivery. What that means is that price can react both ways with a wick. It's not as strong PD array as a fair value gap or order block, but it can be utilized so good in combination with fair value gaps on a high time frame. Look what I just said there. Anyways, you guys, look here, reacted off of it, continued lower. Here's the original consolidated, you can see here. Here's the wick, which I talked about. Or here's actually the rejection block. And also wick. You can see just everything matches up, you know, it's really crazy. Moving lower, original consolidation right here. The secondary consolidation. Here's the first consolidation. Here's the second consolidation. Right here. Those who can't see it, wait, I'll just do this. Then I have to do this again. Perfect. We have left this, moving lower. This is a market maker sell model for those who can't see it. Because market maker buy model, market maker sell model. You guys know the drill. I'll just do this. Then it just looks much cleaner, so you guys can see it. Here's the SMR. But most likely, this is why you utilize the DXY, because then you can see the market maker models, you can see the models, you can anticipate price so much more when utilizing the DXY, right? You utilize the DXY to get a cleaner bias, to get a cleaner draw on liquidity, to get a cleaner order flow, if you don't know where it's going, because now you may be anticipating high prices on EU, right? But if you would have utilized the DXY, because DXY controls EU, like no matter what you think, it will move with the DXY. If it does not move with the DXY, sooner or later it will, right? And then you can just anticipate the prices, because EU, okay, the DXY is never gonna follow EU, okay? DXY or EU will follow the DXY. That's it. Anyways, you guys, look at here. There's the daily. Here you had an STA setup, bam, writing it down here. Here you also had an STA setup, bam, writing it down here. Here you also, like, you have so many STA setups in here. I didn't take it. I missed this STA setup, I think. Wait, no, it was this STA setup. I missed this one. But I would still have gotten taken out, because here's the really big STA move down. Taking this strong liquidity, which I have here, I think EU will move down, taking this, and then moving into this rejection block. Rejection block, you guys know what it means. It's two order blocks coinciding, and then you use the wick. That's the rejection block. Moving this, taking this, and moving higher, right? You can see that we are still bullish. We are still bullish on the weekly time frame, but we are bearish on the daily. Okay, that's just because we are in this market maker sell model. We're moving down into weekly discount. Okay, after we move down into weekly discount, we react off of the highest time frame PD array, right, in that weekly discount, and taking sell side after rebalancing, and then moving higher, right? Anyways, you guys, going into the 4 hour now. Going into the 4 hour, you can see we left this consolidation right here. Well, it's here somewhere. Moving here, reacting off of the 0% mark of this fair value gap of the city, moving downwards. You can just see it much easier. You can see we took this equal highs, relative equal highs right here, reacted off of the order block right there. Bam, moving lower, going for this strong liquidity now next week, I think, and then moving higher. That's it, right? There's nothing more we can talk about. Like, we can go into the 1 hour, but you're just gonna see the same thing more or less. You can see that the 4 hour is also bearish, 1 hour is also bearish, but I'm anticipating higher prices first, rebalancing, taking out some buy side inefficiency, and then going lower. Bam, that's it. Now we go over to EU. I'm sorry guys. We took this strong liquidity, right? So AU is probably gonna consolidate. Okay, why? Or moving to this, we'll just see. So weekly, okay, the thing I'm seeing, here's the intermediate draw liquidity, these equal highs right here, really good intermediate draw liquidity. Okay, translating that to EU, Okay, that means that we take this or take this. This is the intermediate drawn liquidity, or this is actually the ultimate drawn liquidity. But on AU, this is the intermediate drawn liquidity. So we've taken this lower time frame drawn liquidity. Now, what can AU do? AU can do two things. Okay, AU can either, okay, because we are bullish, right? Still bullish. We have taken this weekly sell side right here. We have moved lower, right? But what AU have done, you can see EU have already retraced a bit. Compare that to AU. You can see we have not when EU retraced, I took out some sell side. Okay, AU just did that for 1 week, while EU did it for 2 weeks, 2 consecutive weeks, right? And then moving higher, and then moving higher. What this means is that AU, I said we would anticipate a bigger retracement and taking out some more sell side liquidity because it wants to be as rebalanced as EU, right? What this means is that we're probably gonna maybe see lower prices or a consolidation because we took this drawn liquidity before EU took this drawn liquidity. What we can anticipate now is we can translate it to EU. What will EU do if AU have done it? EU will do the same thing as AU. Market relations, boys. So now you know that EU probably gonna be, now you have an extra confidence that you're gonna see that the drawn liquidity get taken here. What you can anticipate on AU then is more or less a consolidation or a retracement lower into this mean threshold right here. But I'm not suggesting that. This is the two options. Like we can either consolidate or move a bit lower into the mean threshold. If we go below the mean threshold, I would change my bias, but then everything else would have changed. Okay, then we would have made a market structure shift right here and a market structure shift on the DXY, right? So then we'll just have to anticipate. We'll just have to see. But now, next week, this drawn liquidity. Next week, this drawn liquidity right here above this. Hopefully you guys understood everything. What the things you kind of annotated is this fair value gap right here. Okay, you can also have this mean threshold annotated. Also this drawn liquidity, of course. And yeah, let's just go right into the big charts. Wait, so just make it bigger again. Yeah, the weekly. But here we have relative equal highs right here. What I was anticipating was that we took these. Okay, I'm still having this as a drawn liquidity. Okay, the intermediate drawn liquidity. Here's the ultimate drawn liquidity for AU. But now after taking this, we'll probably consolidate. Okay, and then moving higher. What do we have on AU, which is really important next week? Everyone write in the chat. I want to see so y'all can understand the underlying dynamics of AU now. What can you all anticipate next week on AU and why? Yeah, but what did we have in terms of news? In terms of news delivery into the markets? We had the interest rates in AUD USD, if you guys remember. We had the AUD USD, what is it called? We had the cash rates, we had the RBA rate settlement, or statement, RBA monetary policy statement, the RBA press conference next week, next Tuesday. What we can either see here is either it's neutral or either it goes higher. Okay, I'm not seeing lower because we have already, of course it can be lower, but probabilistically I think it will go higher. Okay, just because we have already taken this strong liquidity, taken the sell side. Everything depends on what the DXY and does, but now this have moved before the DXY, now it have moved before EU, and I think that's why we most likely going to consolidate, wait for these two things to re-correlate with AU, and then we're gonna see some. You can also see now in the daily time frame. I'm sorry for like going to sidetracks, but exactly. Anyways, you guys, now daily time frame we are bearish, but remember bullish on the weekly, right? taking this sell side. Here's the regional consolidation, like we saw on the DXY. If you guys remember regional consolidation, if this have taken, because AU have already taken the original consolidation. Look, we have already did it, or done it. You can see right here, and also these equal lows. And this is just because of the prior things I've said. You could also have this annotated, this weekly fair value gap. You can see reacted off of the 50% mark, moving lower. But I think next week we'll probably just consolidate a bit, then moving higher. That's it. Of course, we gonna maybe just manipulate to the downside before moving higher, right? So I'm maybe seeing this. Okay, consolidate, waiting for EU and DXY to take this, take the DXY buy side liquidity, EU taking sell side liquidity, consolidates, and then manipulates, and then distributes to the upside. 4 hour. Nothing special. You can just see this consolidation, massive consolidation, moving into here again, 25% mark, and then moving lower. Bam!